Hey Alpha fam, welcome back to another episode of Alpha Commission. Today we're just checking out the little bounce that we're having on Bitcoin. It is kind of a nice one, compared to the bounces that we've had before. What makes it a little bit special? Well, a lot of the indications have that we've kind of pushed it down pretty far, and we may just have a little bit of an extra bounce in order to, recheck some of our levels. One of the levels that I was talking about yesterday with some friends in their group, the AR Collective, which is just an incredible, healthy, extremely productive group, which just, it's making, pretty much millionaires out of newbies. I mean, they're just learning so fast. They are just future millionaires, just doing it the right way. But, everyone's learning at their own pace, and, people have different strengths and weaknesses, including myself, and I'm not always the most confident trader, even when I make some type of a call like this. But that I mentioned, I primarily use EMAs. Of course, I have a lot of other indicators on the screen, a little bit just for flash for some of these videos and just for a theory, but primarily I'm using EMAs. And I was looking at the structure that the EMAs were developing, and I put it into kind of triangles here, just so it's easy to look at, of how the behavior of Bitcoin has been following its EMAs during this fall. And one thing that you would notice is that it's making these kind of wedges as it just retouches its EMAs. And so I just hypothesized that Bitcoin was going to kind of put in this after this double bottom, that it was going to probably reach up, make an ambitious drive for its EMAs. Or if for some reason stocks were bad in the market, then we would probably have some sideways action. I didn't know how stocks would open up today. Most likely sideways or a pop, and that Bitcoin would have this type of a move. And sure enough, you can see right over here, Bitcoin just almost as if I had foreknowledge of it, just popped straight up. And of course, I didn't have foreknowledge of it, but I did mark it off. As you can see, this region, we needed to fill the area, right? We needed to fill the area. So whenever we talk about these charts and trading, we're not talking about, distance, and we're not talking about up or down. We're really talking about areas, and areas need to get filled, right? So by touching the side of this triangle right here, it kind of fulfilled the needs of its EMAs. Let me go ahead and put on those EMAs. And what you can see, just so you get an understanding of kind of how I'm using them, of course, up here, while we're making turns, it's not always that clear. And also at the very bottom, when we're turning at the bottom, it's not always very clear because some of the slower EMAs won't come up above the price action when you're at the top, and then same at the bottom, right? That because they're slower, so it takes them more time. So you'll see how they start to fill out the picture after a second drive down or during a second drive down, not necessarily during the first, change of course, because they're coming from under. They slowly have to make their way to the top. That's why they're the slow EMAs. Here I have the 200s, and of course the yellow and the red one are the 10 and the 20, right, which are pretty much industry standards. And so, as we create this type of wedge pattern with the EMAs during any type of traumatic fall, the price action has to catch up with the EMAs. And right now I'm on the 1 hour, but this is true of almost any time frame. It just takes different amounts of time for it to happen. But if you're ever wondering why price action goes up and down and all these spiky moves, or why it kind of have like teardrop shapes that kind of like swoop and swoop again and swoop again, it's because of how price action is checking back with its average. Okay, that's why MAs, EMAs are, the moving average, right? SMAs and EMAs, simple moving average, and I believe it's an exponential moving average. And so, would it surprise me based upon the behavior of the movement of this of these EMAs, for it to attempt to check back to the 200 up here. No, it wouldn't surprise me if we went as high as 42,000, but based upon the current price action, just that we had locally just in the last few days, I would have expected at least to get to the 89. And what did we do? And see, this is why I marked it out in advance. I could mark it out in advance because I'm an EMA trader and I can visualize how price action might move to the 89. Now, you may say, what was the other one based upon, right? When I had another model like this, and it was just based if the market was suppressed, maybe stock prices were going down, then maybe instead of reaching up like this, it would just kind of go sideways until it checks back with its EMAs, and then we can continue on our way. And if you look at the daily, right? If you look at the daily, you can't really see all of that detail because you're just too zoomed in. So a lot of the times I like to trade on the higher time frames, but I'll go down a level, to like the 12 hour. And here you can see we're actually just touching the 20, right? I mean, pardon me, the 10. We're just checking back with the 10. And then I'll even go down lower. And here you can see we're checking in with the 20, right? So these lower time frames, they start to give you smoother curves on your EMAs. And although you have to remember that on different time frames, the EMAs are different numbers, of course, they're interchangeable. So that means that even if I'm down here at the 1 hour, okay, I'm looking at the 89 now, but it's approximately the 20 on a different time, on a higher time frame. It's approximately the 10 on an even higher time frame than that, like the daily, right? And so every time I go down a time frame, I can just think about what the EMA might be on a different time frame, on a higher time frame. And when we go back to these higher time frames, we have to understand that eventually we're probably going to be checking back somewhere, right? And that's why you see this big swoop on Bitcoin, because on the really big time frames, right, we still get this kind of like a teardrop shape. And over here we also got a teardrop shape, right? Just coming back to check our EMAs, and look, checking back to the 89, checking back to the 200 after making this huge push up. And then again we did it. Like, no one should have been surprised that we came down here and checked these EMAs on these higher time frames, right? So as soon as we get too far away from the average, these are moving averages, price action likes to check back and ensure that the average price is being met so that buyers and sellers have all the chances that they get to negotiate the pricing and that nothing is forgotten. If we didn't do that, we would just have straight lines up and down, and that would be, it would be insanity because you wouldn't really have any chance to double check the pricing and make sure that you're on the right track. So that's why we get these big, corrections when we find out, well, you know what, actually this wasn't as stable as we thought. This was stable here, this wasn't stable. And so we came back and checked these prices, right? You see this massive wick down here. Let me turn off those. You see this massive wick down here, just rechecking this area because this area failed. And then, of course, we rechecked this area because this area also failed, right? And things changed in the world. Things changed in the world. So here we had a huge interest rates like being threatened to us, and then here the interest rates were starting to be like the schedule for them was, pretty much understood that it was going to be like a double interest rate. And then we had war. And potentially all we had to do was like swoop down and come back up. But of course, the world changed, right? When we started to talk about interest rates. Had the world not changed and had everything just stayed the same, maybe we could have just kept on the path and gone to 100K. Nobody knows. Nobody knows. But of course, price action has to come back because things change, right? The interest of people change. This is, economics is a social science. It's not a hard science. And so civilization and society does change things. And here, people get more nervous about interest rates. They get more nervous about double interest rates. And they get nervous about inflation. And they get nervous about, Europe being invaded by, some dictator, like Putin. And, we can get a little bit exuberant. We can come back to check to see if there's any optimism in the market. And if there's not sufficient optimism to overcome the negative things that drove us down, well, we double checked. And then, we get rejected if the conditions just aren't right. We can recheck the bottom here, see, well, did we go low enough? Were we scared enough? And some people can say, well, we want to double check. We want to double check, right? And of course, this is all related to pricing. It can be also influenced by bots and manipulation and all that stuff. But overall, you can see these patterns are like these teardrop shapes, right? This is an upside down teardrop. This is a teardrop coming down coming down this mountain. And then you just hit all these series of teardrops. And on the higher time frames, sometimes it's hard to see the local price action doing that. But if you drop down to like a 6 hour, you can say, oh, there's a teardrop, there's a teardrop, there's a teardrop. And you get even lower, you can see it in much smoother detail. And you can pick like one of these time frames that just makes the most sense to you. And if, for example, let's say instead of the 4 hour, maybe the 3 hour or the 2 hour, or let's just say the 6 hour. The 6 hour looks pretty good. Why does the 6 hour look pretty good? Because you can see kind of this swoop comes up and touches the 20, right? So this time frame, the 6 hour time frame, looks pretty good from an EMA perspective in terms of double checking the 10 and the 20. So if you have a 10 and a 20 strategy, you can easily use this to understand, okay, I'm underneath the 200s, which isn't a good thing, and I'm just checking the 10 and the 20. And so this is a high possibility of a rejection in this area, sort of like what we got here, right? And of course, I told you these are delayed at the top of any major curve. Like if you're coming from a major low to a major high, wherever the bottom is or wherever the top is of those major movements, it's going to be a little bit inaccurate to use this. That's when you want to use more kind of like a trend, right? So this was a lower high than this one, and that did not bode well, right? There was a fib, there was a fib channel here that often had rejections, and so that didn't bode well. I didn't use my EMAs for right here, but you could have for right here when you saw that the 10 was turning very significantly. You could have said, you know what, kind of want to get out here. This doesn't look the strongest, and definitely when I broke my 20, that's gonna squeeze me all the way down. And so you can use it here, but you just can't use it for the very top, right? Can't use it for the very top. You don't know yet. You may want to use other things. And depending on what time frame you are on, you can double check with a structure and of course look at your supports. But the EMAs overall, could navigate you through this. Like if you got out here, that wouldn't have been a bad spot. And someone using structure on this whole movement, they might have gotten out, over here or something, or even right here, they might have gotten out. But your EMAs on the 6 hour were saying, you know what, you may want to just pause your position right here. Why? Because these were about to cross negatively. This yellow and this red were about to cross negatively. And if they're about to cross negatively, after being positive for all this time, right? They were positively crossed all the way since here. Like you might have just wanted to get in here when they positively crossed, and then you could have just ridden this up all the way up, and then they negatively crossed, and you could have just gotten out, collected your profit. Who cares what the moon boys are telling you? Who cares what everyone else is telling you? You saved your capital, right? You preserved your capital. You were an EMA trader. Congratulations. You earned your money. okay? And you ignored all the noise in the market, you ignored all the moon boys, you just took your profit. And yeah, we turned around, but we never really got back on top of it. Like from your EMA strategy, you really didn't necessarily need to get back in the market. You could have just waited until you had another one of these bullish crossings where price action was riding on top of it. And as long as you didn't significantly break down from the 20, you could have just kept riding this up. And I'm just on the 6 hour. I'm not even using like a daily strategy or anything like that. I'm just day trading here. Okay? Like a intraday trading and day trading. Perfectly fine. Perfectly good strategy. Okay? And same thing here. Oh, you know, we not only crossed negatively here, but now we're like under the 10, which is terrible. We wanted to be above the 10, so we're under the 10. So I'm just gonna like get out, and I'm not even gonna come back into the market. And then we broke under the 200, which is that long moving average. So if you're breaking under your long-term average, that means you're pretty low, right? Now you can imagine that things might start to become a good price value. And so if you wanted to consider to DCA in those type of things, that wouldn't be the worst strategy in the world, but, you have to take it, in consideration with a whole bunch of other factors. It's just you wouldn't have wanted to DCA in here, right? Like right under your cross. That would make no sense. But hey, you got under your 200s. It probably isn't the worst time to start DCAing in. You just have to have some type of theory. This teardrop shape, like if you just zoom out, this massive teardrop shape kind of played out, right? If you're using your 200s as a baseline, there's also 300s and 400s, there's other shapes, but 200s is a pretty industry standard. And once you completed the structure, you might imagine, okay, maybe another structure is going to be developed with this 200. I don't know what it's going to look like. Maybe we could just keep dropping the same way we just kept dropping under here. So I'm not going to be over optimistic because it looks like we could just be entering, right? I mean, not to scare anyone, but we could be entering another phase like this, right? See, that's where your EMAs like crossed with the 200, and you could potentially just set up that whole move again. And that could bring you down to like $20,000 if you just did another one of these. And we just did one. It wouldn't be that hard to do just another one, right? I mean, it's kind of extreme, but it's possible. It's plausible. Based upon, the setup, it's possible. However, we can also look at what the movement recently has been. And we've had a couple crosses, with the 200 over here, and it was just like this tiny teardrop. It wasn't this massive move. It was just this teardrop and this teardrop, and they actually got smaller, right? And then we actually got bullish. And so would you expect this to be the biggest drop? Maybe not. We have some support here, right? So most likely the floor isn't going to get kicked out from under you. If you try to look for some divergences, oh, you had some, positive drives of divergence, right? So it wasn't the worst move to consider that you might be popping up and checking with your EMA. You had a positive drive of divergence, and you also were getting a little bit far away from the 20, and you know that this price action on this time frame checks back to your 20. On other time frames, it might be the 89. On other time frames, it might be whatever. But it was looking like it might be time to check back in, at least to the 10 and probably to the 20. And you could always check back into the 200. You never know when that's just going to come along. Okay, it could just get really bullish sometimes. But another indicator, like if you go on to an even smaller time frame, why I have this circle drawn out here. Another indication was that we just had like a really nice double bottom. Bottom, bottom. Like we didn't break lower. And so for some of these other moves, like you could see this actually had a higher low. And so that meant, okay, yeah, if we broke down here, you could just wait for some confirmation. Oh, a higher low. Okay, I think I'll take a little bit of a risk and take this trade. It's risky because you're not sure if you're done pushing down. You can see what can happen, right? Like this was a low and then you had a higher low and you could like come back down. So I wouldn't necessarily personally take that trade myself because we're just way too high up here. But at least you had some theory that you're not breaking down, and you could have, just put like a stop loss under here so that maybe at worst you have a double bottom. But if you broke under this price, then, you're probably going down lower, right? So you could make a theory of how to trade on these type of things, or just whatever you want, take your own risk. But we made a double bottom here, and then we made a higher low, and so uh, in this first price action, and then we put in a little local high, made a double bottom. So the price action was getting tested. We put in a higher low. It looked like it was stabilizing, and so it started to look kind of like these areas. You started to see your EMAs bending. And when they started to bend into a squeeze, you can imagine that it's going sideways or possibly going to try to pop up. And so then I had the concept of, in my mind, where I thought it might meet. And I drew out the triangle. And so I thought, well, worst case, we're going to go sideways. And best case, we're probably going to test up here. And then, if for some reason the market gets super bullish, maybe we come up and test our 200 over at the 42,000. And so this is what I was looking at when I was commenting in my friends group, that really cool group, AR Collective. And they got like a training course coming out and all sorts of stuff. So I'm not shilling for them or anything. I don't get any type of commission or anything like that. I'm just a member in the group, same as the other guys, and I find it valuable because a lot of what you see on my screen is pretty sloppy, to be honest, right? As I tell you like every week. I don't say it every episode, but I mention it at least every week. I'm a continuous learner. I try to keep learning new things, but I'm by no means an expert. I don't like that term. A lot of our friends got like scammed by somebody calling themselves a crypto expert and or an expert crypto, whatever. But be be cautious around people who call themselves experts and that don't try to give you validations and invalidations. They just make calls. And it doesn't matter if they're showing you harmonic patterns and they're saying like faces will melt. We're going up to here to the moon. That's BS. Like give us your validations and invalidations, right? Don't make fun of people who take their profit, right? Anybody acting like an expert as opposed to just giving you validations, invalidations, profit points, and stop losses, and all these type of things, right? Whether they're using harmonics or EMAs, or whether they're just doing trend, or whether they're using order blocks, or whatever style of trading that they're using. Just make sure that they're giving you validations and invalidations, not calls, right? And if they seem like they're overly championing something, like they're just really focused on one coin, probably they've been blinded by the market. They've been blinded by marketing. They've been shilled. They've been manipulated by the devs or the devs marketing team, or just all of this type of stuff that happens in crypto that makes people blind. And so, it just you don't necessarily know what's going to happen next because this industry is controlled by big whales, by big institutions. You can make as many calls as you want, but of course there's bots that come into play, there's algorithms that come into play, and the exchanges, they know what they're doing, right? They own a ton of this asset, they control a ton of this asset. Um, it would be like if the stock markets like owned those stocks. The amount of manipulation that's possible in this industry is just mind-blowing. And so when you think about regulation and all that stuff, it's really necessary to clean up this industry. Don't be too afraid of that stuff. I know a lot of guys want to like avoid their taxes, paying taxes and stuff like that. But if you really want this industry to grow, we do need some regulation, and so we need to have some people who love crypto, like help guiding the regulation, not fighting the regulation, help guiding the regulation. And I hope you guys, grow up in this space and start to talk about reasonable solutions and creating those kind of good governance topics for the crypto industry as we grow. Otherwise, we're going to get shut down one day because the old history of the criminal networks, which was the Silk Road, right? All of the illicit weapons, the child trafficking, all this stuff that was sold on the black markets with crypto. Otherwise, that legacy is just going to overshadow everything good that we do. And so it's very important to support meaningful, useful consumer protections in this space. Because I guarantee you, the globalist billionaires, and they are globalist billionaires, they are not your friends. They are not libertarians who are just small guy libertarians. They are globalist billionaires who control this market, right? They're everything that you hate. I promise you, no matter how conservative you are or how liberal you are, the guys who control these markets are everything that you guys hate. Okay, both of you guys, like both sides. And that's why I try to make a point to like talk about the politics on both sides because, you know, it's important, guys. Like we should be talking about this stuff. And I don't mean to spend too much time on it, but we do need to talk about it. We have a problem where we have in this industry an image of it being like of crypto being for the little guy, but to be honest, it's for the globalist billionaires, and it is still in a large degree held by a lot of very shady criminal guys who will just destroy you and dump on you and all sorts of terrible things, which means that your grandma and your mom and all these mainstream people can't get into it. They can't even get a receipt for a transaction, okay, that makes sense. They can't read that stuff. We need to work on this stuff, okay? Moving forward, you can see Bitcoin kind of making these positive kind of bullish, structures up here. Maybe we drive up here. I'm not sure where we're gonna go next, but we are getting a little bit of a stable platform down here, so just keep your eyes open. Keep your eyes open. Otherwise, this just looks like a good spot for another, lower high, right? Lower high, lower high, lower high. And how are we on our trend, basically? Yep, so if you see this is just like a trend line, we're underneath it, right? We're underneath it here. And maybe if we get on top of it, we'll go up, but maybe we're just gonna go back, back a little bit. What would we check? Hmm, maybe like 40,500. If we get rejected here, maybe like just 40,500-ish, 40,600-ish. Just kind of double check back in this area, kind of like how I have it drawn here from yesterday. And then see if we can use that as support. And that might get us up to, I mean, maybe a wick up to here, right? And that would be that would have been a pretty good move for Bitcoin if we can like play out this whole thing. Wow, like 8%, right? A lot of the alts aren't even moving today, or just barely. Got some interesting ones. but most of them are pretty low. They're moving just as much as Bitcoin is moving, and some of them have moved even less. So yeah, Bitcoin and the market doesn't seem to have a lot of interest right now in it. So I'm not sure if this is going to succeed. I'm honestly not sure if this is going to succeed. Mm, where would I target to see this as a reversal? I don't know. I guess in this area, maybe 44,000. If we could come as high as, 43 and a half, I think it could be a bull trap. I think it could be a bull trap. But if we were able to sit above 44K, then hey, man, that would look like just a kind of a crazy pullback. But maybe you'd be on your way. Maybe you'd be on your way. Give it another go, right? Like we lost our confidence with the stocks, maybe. Maybe the stocks drove us down, and then we were able to find our way back up. Back up this mountain. That would kind of be consistent with what we've been doing here, right? Like these major ups and downs, that really wouldn't be out of character for what Bitcoin's been doing. And if we just kept chopping up like that, or even had a mega push after a certain point, after retesting all of this, it's possible. Just because again, like for me, this is live. So just as long as we're under this trend, and as long as we're definitely if we're under 42,000, if we're under 42,500, definitely I'm not thinking too bullishly. And yeah, this 43,500, 44,000. You don't want to get on top of that to see kind of a reversal. So let's see. Let's see. Otherwise, just one of these is playing out. It's a little bit more compressed, right? So this one had kind of like a swoop up and then, a swoop down, and then it retouched its EMAs, right? Swoop up, swoop down, and then retouch EMAs. So this is kind of more like just a concentrated version of this one. And this was more just kind of like a super concentrated version, or maybe just, I don't know, just a horizontal version of these, right? Like it's getting more vertical, is what I'm trying to say. Like this was very sideways, this was sloping down, and then this is like very vertical. And if we dropped from here, I guess, I don't know, I'm not sure where we would go next because, hmm. We are seeing the possibility for this, an increase in positive momentum on the 6 hour. We are starting to get out of this bearish control zone on the 6 hour. Looks like we may want to check back before doing anything, too interesting. Not sure how long this drive of bullishness would last, but we could get back up there. Kind of expanding from these lows on the volatility. So a little bit, looks like we have a little bit left here on the 6 hour. Yeah, I mean, I'm just gonna stick with what I said. Just in my opinion, and I could be wrong, but Hmm. Hmm. I mean, daily also looks like it still wants to correct a little bit. It looks kind of sideways, to be honest. You see something like this maybe. Where was that? Right here, this wick. Where we kind of have a push up and then we come back down. That's what I'm thinking right now, that we're doing something very similar to this. We had a like a kind of a drive down, then a push up, and maybe, maybe we're gonna check back down and then perhaps have a nice push up, like fake people out and have a nice push up. Or maybe this is just gonna be at the push. I'm not sure. I don't want to be overly bearish or overly bullish, but the 6 hour has a nice setup here just to continue if it wanted to. There is a lot of resistance in this area. So yeah, getting above 42,000. Let's just say that's the, as my friend Retta would say, that's the first boss, so getting over 42,000, and then this 40, yeah, 44,000, I guess, up here. I'm not sure which one of these would be more important to get over. Um, Whenever we have like little shelves like these so close together, I'm always confused which one I should be looking for. That's something I should probably investigate better. But yeah, I would expect that we would want to get over this area. So I'll just say 44,000 because it's going to be above these EMAs also on the 6 hour. So that's just going to be like added confluence. And then I would probably turn pretty bullish. You might say, well, you've just recaptured half of the move, so of course you're bullish. Yeah, but underneath these levels, I'm gonna stay a little bit biased towards the downside because I would think that you could just put in a lower high. But if you get up to here, I could think that we could continue to push, you know, higher. That's the key point. I would think that we could push even higher. And so yeah, 42,000, 44,000, and then we can just take it from there. Otherwise, if we don't get even past 42,000, then I'm just going to assume that we're going to come back, probably make another attempt. Maybe we could fall as low as like 40,500-ish, probably at least, or even lower, but 40,500, and then maybe make another try. Uh, Otherwise, maybe coming down to like I had some trend lines up here. I'm not sure where I put them, but oh, there we go. Yeah, so the thing is about diagonals is that they are channels. They are not price support. So whenever you think about like horizontals versus diagonals, um, it's not the same thing as like order blocks existing at a certain, because this is a continuous line, right? So the thing about horizontals, which makes horizontals so powerful and why you want to always remember your horizontals, even though I tend to just eyeball it, is that, and I have my diagonals drawn, but I tend to eyeball the horizontals. So I am using horizontals. But the thing about horizontals is that they tend to correspond to like order blocks and different, supply and, demand zones, right? Which is extremely important. And so it's just a different style of trading than when you're using diagonals. Like you wouldn't want to think that they are equivalent. Okay, they're for different purposes. But when you think of a channel, Like I don't think anyone could argue that this was a channel, that this was a trading channel, and if you had traded this, you like nobody can call you an idiot for having traded this. Okay? Like I know people just stressing about all these like horizontals, right? And they but but all this was just like a sine wave, right, inside of a channel. And so if we do have another push up, where do you think that this push up was going to come from, right? Like don't dismiss diagonals. Like I know professional traders who dismiss diagonals, and I have no idea why. Like if you ask them, like, have you ever traded a channel? They'll be like, oh yeah, I've traded. Like I trade channels all the time, of course. And then you say, do you use horizontals or do you use diagonals? And they'll say, oh no, I don't believe in diagonals. What? What is a channel? Like why do people not like diagonals? It's just too much information on the screen, I think. So yeah, if you've ever traded channels, you trade diagonals. Okay, you call it something else. And literally, this is just what's going on. Okay, and so could I expect like some type of push down in this area, and then we go like sort of like what we did here, right? Sort of like what we did here. Yeah, absolutely, I could, right? Like I could imagine that if this channel stays alive, if the stock market doesn't just take a big shit, right? And if the world economy just has stability for a couple more weeks, right? Then probably we're just going to trade this channel, and I would expect some upside. I could easily expect that 44 or whatever, right? The question is if we've now gotten to the point where we're going to start breaking down, the same way that we broke into this zone. So look, if you look at this area, right, we kind of, well, let's just look at it from reverse, right? Like we came down, kind of hit here, bounced up pretty nicely. Just if you're thinking like, think opposite, okay? Like came here, had another nice bounce, and then like we just fell to hell, right? Just pretend this is a chart that's flipped upside down. In fact, let me flip it around for you. Okay? So just think backwards in time, right? Like let's just say that you're falling down here, and then you had a nice bounce. Oh, good. It's bullish. We made a higher low, right? Like if this was your low, backwards in time, we made a higher low, you know? Oh, we made a higher high from this one. Like everything looks bullish. And then you just like fell down to hell, right? Well, let me flip the chart back upside down. And what I'm saying is like we could be doing that same type of thing, but forward in time, right? So just like this one, like okay, oh, we're falling down, right? And then oh, a nice bounce. And maybe even again, oh, a nicer bounce. Yeah, everything's gonna be bullish. And then you come back down, and then oh, right, like that kind of thing. Because there's been a lot of price action in this area. Like this is the normal amount of time that you would spend at the top of a chart, right? Like this is actually longer than the top of this chart. This is longer than the top of this chart, which would, took us from 30K to like a 52, took us from 40 to $70, right? And this one, took us from $10,000 all the way up to $65,000. And the amount of time that we've spent here is pretty much equivalent to the amount of time we've spent here, right? So, how much longer are we going to do this? How much longer are we going to do this before something gives? And the thing that concerns me is that we haven't sprung bullish yet. Like, after all of this time, like, we haven't sprung bullish yet. It feels very suppressed to me. And so I'm still, like, again, unless we, like, have a clear reversal, like, above 44,000 and then above 47,000, like, because, there's different levels of validation, right? So for me, 42, then 44, and then that 46 to 47 area because of we put in a high here, right? So 46 to 47, just to show that we can like exist in that level again. And then maybe we can be talking about these higher levels because that's going to be a strong trend up, like, right? And but otherwise, we're just down here. And what I'm thinking is like what we did here is gonna start to play out soon. And then if we don't really recapture that momentum, then our volatility is just gonna take us down, right? And if we just have decreasing volume and all this low volatility, and maybe it's time to recheck some of these lower prices. We've rechecked it. We've rechecked all the pricing in the middle. Like we don't really need to check those prices out anymore. We've checked all of these prices out. It's time to start checking out either the 30s or the 50s to 60s again, right? So the 30s to 20s, maybe even the 10s. I'm not going to say it because you guys hate that, but you could double check these prices down here because they've never really been audited, right? Like these prices, they've never really been audited very well. All of this price action has been rechecked, right? All of this price action has been rechecked from 3,000 to, from, we went as low as 4,000, 3,000 during that chrono dump. And so all of this has been rechecked. So it's just above 10,000 and definitely above 20,000. It just hasn't been checked very well. Not sure what's going on with my chart. Why can't I see more? Oh, this is Bybit. That's why. Okay. But anyway, so we could have the opportunity to double check these low prices or to double check the highest prices in the coming month or two. My bias remains to the downside until we get to those levels I was talking about, 42, 44, then like 47 and plus, right? But for this very short term, we do have a chance for a bounce. Perhaps just a lower high before we continue on the way down. This move, when we changed our momentum up here, it was a very strong move from 48 to essentially 38, right? Let's just say it was a $10,000 move. And that's what I was screaming to the top of my lungs to everyone. Like when we were in this area, we're gonna get rejected. We're gonna have a $10,000 move. We're gonna have a 20% move down. Like guys, like it just the algorithm of Bitcoin like is in play. Like it's gonna happen. Like just hold on to your hats. It's gonna happen. And of course there's invalidations, but how do you fight the behavior of Bitcoin? Like it was so clear on the charts. You even have this huge drive of bearish diversion, right? So all of these things are here. And so of course that was going to play out, but now that it's played out, what comes next? And we start to see like, oh, our momentum's changing again. Could we get a 10,000 move to the upside? Could we get more than a 10,000 move to the upside? Not sure. Not sure. For me, it still feels like we need to play out a couple more of these, or at least like one more of these, get a couple strong red lines perhaps, and that we're just gonna have a little bit of a fake out for a while. But that's up for you to decide. See, on the 2-day, like our drive down is still just the beginning. I mean, this could uncross if we have a significant push. Mm, yeah, I mean, like 46,000. That's what I was saying, right? 46,000, perhaps. Still a ways away, right? 3-day. Mm, 3-day doesn't look the worst. I mean, it could have another bullish momentum. Yeah, but 3-day is saying it continues to fall, basically below 42,000, let's say just 43,000, continues to fall below 43,000. So again, that $44,000 area is very important. It's not just 42, it's 44. Because there could be wicks and things, right? So I don't know, and hold above 42,300. Let's see what the 5-day says. Now 5-day is giving you that $42,000 level, but this doesn't look that convincing. This is fairly low on the 5-day. Hmm. Yeah, so 41,500 kind of our very short-term goal. Oh yeah, and the 2-week looks pretty ugly also. So yeah, a lot of these time frames have a little bit of a conflict in what they're looking for in order to remain bullish or bearish in terms of momentum, which is an indicator that we've kind of gotten to, a point that could become a turning point, but isn't quite defined yet. So we've played out the move that I was talking about, and now we have the chance to see what comes next, basically. So it's just really hard to say. It's just really hard to say right now. Again, you don't have to trade every setup. But the monthly, I mean, the monthly is saying we continue falling if we're under, basically 52,000. So we're a long ways away from 52,000, right? But yeah, maybe that's possible to get there. Sorry for the lines. I know, like one of my hero traders is using the 5-day for checking momentum. And I've been looking at this and kind of doing some analyses. That's why you have all these lines. Just looking at the peaks and the valleys on it. But I'm also starting to get pretty obsessed with the 2 weeks. The 2 weeks for me is quite interesting in that it does align with some very. Let me see where I've got these lines. Let's try to get rid of these. Okay, there we go. What? All right, whatever. So we do have these kind of like low points on this wedge. And one of the things that Crown is pointing out on the 5-day is that we're at the floor here, right? But if you just look at this, price action, then you can say, okay, yeah, like we've bottomed out. Like this is where we usually bottom out on the 5-day. Okay, this is the 5-day chart, and so it's like, oh, we're just going sideways. We would expect a major expansion pretty soon. But that's not necessarily true. It's not necessarily true. If you just go sideways, go backwards a little bit, you can see the lows that we have to hit in order to really get those extremes for, a macro expansion on the 5-day. Yeah, this has been our local history ever since like May, but it's not necessarily a macro low. Our macro low was over here in 2018 and 2020, right? So this was when we really started to see expansion, and this was another. Let's look at the chart here. Yeah, so that was an indication right here. Like if you had gotten in on that signal, I mean, yeah, maybe Bitcoin could have collapsed because volatility is neutral, direction neutral. But most likely you had seen this type of low already, and so if you'd gotten in there, you would have seen this major climbing, right? And then where's the other one at? Right here. What is this? 1118? Right. So right before this huge, kind of dump, this huge dump, right? So again, it's direction neutral. You don't know if you're gonna dump or if you're gonna just pump to heaven. Okay. So this was just a major, major dump, right, that happened, right? And so it was signaling right there, and then it was also signaling, around here, which then became like just a major climb. So that's why I just doubt the macro call of the 5-day. We do see very big moves off of these lows, but the thing is it really can keep coming down. It can come down significantly. It can come all the way down, in fact. And if we're going to have a capitulation event, right? This was the one that was a huge crash. Like this was a traumatic crash. And this was a heavenly pump to, this was a pump to heaven, right? So this was a crash to hell and a pump to heaven. You can't you can't just you can't just use volatility to determine that. And you have to understand this can come down lower. And if you look at this, it is starting to round out, right? We are starting to see some crossing here, but we got a rejection off of it. And so we kind of rejected here also, and then we fell all the way to the floor. We got rejected here and we fell way down. So if we're getting rejected off of this cross, like we can still come down lower, even all the way to the bottom, and maybe we're going to have a crash to hell or a pump to heaven. This doesn't have to mean anything right now. This 5-day momentum buildup doesn't have to mean anything right now. It can just take its time. From here to here was about a month, right? So we could have another half month or however long. We'll find out. We'll find out. It just means that the rubber band is getting stretched, okay? And like whenever the rubber band gets flinged, there's going to be a very powerful move coming up on Bitcoin. And so to look at that, because this is very complicated, and the it's not clear on the 5-day. Some of these other time frames are really much more messy, right? Like you just don't know. The daily doesn't tell you anything. So the 5-day is a nice one to look at because it does have this very clear trend. But you can see after a trend like this, like da 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 da, like we floored, right? And same thing, we had like a da 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 da, and then we floored. So we might be entering one of those zones where we like end up flooring, and this might not be like the moment we're going to expand. We don't know yet. So I wouldn't base anything just on the BBWP, this kind of volatility. But if you look at the 2-week is very interesting in that we have this wedge kind of formation, and then we also have this expanding channel. This expanding channel, if you look at the 2-week volatility, looks like it wants to do this, right? It did it here, it did it here, kind of did it here. And so we got this, and then maybe we get this. And who knows, maybe we even get another one before we have some type of like a huge breakout and expansion. So what does that mean? It means we could have some sideways action. It could mean that this is going to represent I don't know, like something. This could be the next super rally, in 2023 or something, right? Again, we could break out sooner than that and go into massive expansion. But potentially, we just have a lot of sideways. Um, I just can't make a call on that. I just personally, I'm looking at this 2 week as much as I'm looking at that 5 day. And it's a little bit conflicting. The 2 week suggests that we have room to go down on the 2 week, and that wouldn't be unusual for this type of behavior because the 2 week doesn't seem to go back into expansion until it like hits this trend line. Although maybe it does, maybe it does chop up, and maybe that could be some type of temporary expansion before a traumatic fall. Not sure. When this thing broke this trend, just make it similar. When this thing broke this trend, it did come back to check it. So, hmm, I don't know. But I just feel like this is probably more likely, something like that, right? Like this, there's something about this, and it's rare. And this seems to be on the scale of those macro moves, right? Those really rare moves that just you want to capture. But yeah, so for the 5 day, we do have that kind of volatility, like bomb just building up, where we could suddenly expand up or down, and to a lesser extent on the 3 day, on the 2 day. The daily actually is still expanding. Yeah, I'm not ready to call that one. But hey, you know what? Again, like if we get over like a 44,000, then then maybe, maybe we're just going to enter some crazy expansion to the upside. And also similarly, if we break down from like these, 37,000 or something, maybe just crazy expansion to the downside. But for right now, just kind of sideways, looking for 42, looking for 44, looking for, 46, 47, and then looking for, eventually like 52, see if we could get above that. And that would correspond with a lot of the other indicators that we look at and would also just totally change our EMAs. So nothing biased right now, nothing biased. Okay, gonna end there. Thanks for sticking with me. This is, again, it's a green day, but if you look at stocks, they're just putting in, they've just put in a higher low. And when you put in a higher low, you don't necessarily expect that like it's over after that higher low, right? So we're finding some support here. Maybe we're just going to consolidate. Uh, sorry, did I say a lower high? Lower high. We put in a lower high, which is a downtrend, right? And so what we would be on alert for is possibly some, you know, like test up here and then, whatever. I don't even know. Like we could be doing something strange, but just we're just not 100% confident in what's going on here. We want to get back up here, see if there could be a breakout. There's a lot of work to do in the stock market. There's a lot of work to do to get stocks When we were up here, there was a chance that we could like just have a bullish retrace and just continue going, but we broke down. We broke down bearishly. And so we just have a lower high. We just have a trend line down. All these charts look pretty much the same. Are we going to make a lower low here and keep coming down? Or are we going to bounce up and start to make some corrections, right? We're going to find out. We're going to find out. Don't have the answer right now. The only thing that we have as an answer is that we are in a downtrend. Like when we put in this high and got rejected in the last week or so, it was pretty much confirmed like we're in a downtrend, like a macro downtrend right now. Like yeah, this was also, but we had a chance to break out of it and we didn't. We didn't. This was more local. This is starting to get more macro. Okay. Yeah, a push up to like this type of a level isn't, unless we break above it, it's still in danger of being squeezed to the downside. So this could be a temporary bounce. There could be like another low before we put in a higher low. Just yeah, wait and see. All right, guys. That was your alpha for the day. Stay safe and happy trading.